Stock slip after a strong opening. IT and utilities lead the gains while metals and auto drag.
HDFC Bank gets back on the high growth path with a good pickup in income and other margins despite deposit rates climbing higher. This even as asset quality remains stable.
D-Mart owner Avenue Supermart slips after it misses profitability estimates, while Wipro's weak growth and muted guidance failed to live up to expectations.
Just Dial jumps on a strong growth in revenue and profit, while record quarterly sales lift Sula Vineyards. L&T Finance also gains post-earnings.
2022 saw 20% more hirings than 2021, says the Naukri index of Info Edge, but hiring in December was 7% lower than in November, while Team Lee's report says hiring intent for Q4 for lower-level jobs is lower than it was in the previous years.
Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Mangalam Malu as well as Sonal Bhutra. Well, we've kicked off the week on a largely quiet note, you'd have to say. Yes, there are a lot of earning reactions, but we do have the US markets which are shut for trade. So maybe there is a little bit of quietness coming in from that perspective. But this morning we have a lot of the IT stocks which are leading, and ahead of numbers there's a lot of focus on Federal Bank, not to mention a lot of the PSU banks which are in focus, the likes of PNB, IOB, Karnataka Bank, all of them flying away in today's trading session. Motilal Oswal in fact has come out with a note where they've indicated that PSU banks have come a long way over the past 5 years. We'll be discussing that more in detail, but as of now, as you can see, it seems as though it's a day for a lot of the PSBs which are gaining. Not to mention, we have the WPI data for the month of December, which is due any minute. Hi, guys.
Hi.
Go ahead.
So, I was just looking at the way the markets are moving today, and it's interesting to say that every time we go to levels upwards of 18,050 thereabouts, we see some supply coming in, but at lower levels we are facing some sort of support as well. Two things that really stand out in today's trading session. One, the Nifty Bank hasn't fallen as much as we thought it would fall. We're holding around, just 42,350 odd for that index. And secondly, the IT index, that's become a stealth outperformer over the last few trading sessions, currently supporting the index as well. So an up move in the IT stocks is something that we're keeping an eye out on.
Yes, we are. But for now, the market's at the day's low, and this is led by Bank Nifty, so to say. HDFC is one stock that is also at the day's low. So a couple of these names that we are focusing on as well. Other than that, we have L&T, which is at the day's lows. Axis Bank too is lower by around 1.5%. So some pressure coming in for these names as well. So of course, we have the December WPI inflation as well at 4.95%, which is lower than CNBC-TV18 poll.
Much lower than what we were anticipating. We were working with around 5.4 to 5.5%, and that's coming at a sub 5% figure for the month of December. So that's actually a huge softening which has come in for the WPI inflation. It's definitely at a multi-month low, which has come through for WPI. And to put it into perspective, the CPI data for the month of December was any which way at a 12-month low. It had reduced because of the food inflation, which had seen softness on account of vegetables. But this December WPI inflation is definitely a big positive surprise, which has come in sub 5%. In fact, we do have Lata with us to take us through the reading. Lata, this is actually coming at a big surprise. The upper end was anywhere between 5.4 to 5.5% this time.
No, it's a very, very big surprise. As it is, WPI was headed lower because we are now getting the impact of the large base of last year. That will be even more in Feb and March when you start having the war impact, the Ukraine war impact, year-ago impact. So this at 4.95 is a very, very big surprise. And I'll tell you, the big surprise is coming actually from primary articles and food. Food is actually 1.25% lower than year ago. It's a minus. I mean, we've not seen that in a very, very long time. The FAO, Food and Agricultural Index, which measures food prices globally, was surging even before the Ukraine war last year. That's why we have a big base impact. But no one expected the food index to go into contraction terrain. Minus 1.25 year-ago levels from year-ago levels. And when you look at the significant contributors, it is veggie index. The veggie index is down 36% year on year. And within vegetables, it's onions that are down about 26% year on year levels. And the other big contribution comes from oil seeds and edible oils. That one Oilseeds comes under primary articles. Oil comes under manufactured products only in the WPI index. So oilseeds is down -5% in year-on-year terms. And then you have other things like minerals also, which have gone down. Fuel and power also is a minus in year-on-year terms when you look at petrol. The petrol price down, I mean, you're looking at wholesale prices, okay? So that one is, 1 minute, down 14.7% in year-on-year terms. Wait 1 minute, I think it's LPG. That's down 14%. When you come to manufactured products, again, the rise is only 3.37%. Year-on-year terms, and manufactured food products, especially vegetable oils, as I told you, oilseeds, is down 6%, a -6% in year-on-year terms. All that has contributed to the fall. Likewise, textiles. See, we are talking wholesale. We are not talking CPI over here. Textile wholesale products also is down about 0.5% in year-on-year terms. And as you go down the line, whether you look at basic metals, minerals, all of them, the increase is barely 0.7, 1%. It's a fairly substantial fall because we are talking wholesale and we are talking year on year. And we are seeing a substantial fall in global inflation prices as well. So manufactured products as a whole up only 3.3% from year-ago levels. Last month, that is for the month of December, it was 10.7%. So look at the extent to which the year-on-year WPI fall is showing up in the price.
How much of that do you think would be on account of a high base, and how much of that would be actual correction in prices?
Both, no? I mean, we all know that steel prices, etc., have fallen in year-on-year terms, and wholesale has itself shown a substantial fall. It will slowly get reflected in consumer. That's exactly what I would be asking the economist. Rupa Regan, it's the economist at L&T Finance. Okay, she will be with us in just a bit.
But Lata, just a quick question and add on. Now that it's come to a sub 5% figure, it's a 22-month low. The CPI is at a 12-month low. In combination, what does that do when the RBI meets in Feb? And what might the trajectory be going forward, not just the Feb meeting?
Well, to be sure that in the Feb meeting, now the chances of a pause go up. Already when the CPI numbers came in, remember, Ekta, it was a tad below your poll. Your poll was 6.84, 5.84, and it came in at 5.72. Yeah. So already that was below expectation. Now with WPI also coming in below expectation, below street estimates, chances of a pause. Over there, I got a 2:3. 3 still thinking that there is a hike in February and then it's one and done. But with the two of them saying no, they will pause in February because the chances of inflation, undershooting 5% in the first quarter of next year, that is April, May, June, now become very, very stark, and therefore there is no need for the Reserve Bank to go ahead and hike in Feb. They can wait in case global inflation picks up, and that's a possibility. After all, we know now that iron ore prices, coal prices, steel prices have all started inching up again with China returning to the market or the expectation of China returning to the market. So we must be prepared for it.
So begins actually another question with regards to the RBI rate trajectory itself. You're talking about domestic inflation, you're talking about what the global central banks do. And there is no word coming in despite US inflation steadying a little or the increase in inflation stemming a little bit. There's no word coming in from the US Fed officials that they're willing to pause at any time in the near future. So in light of that, will RBI actually be able to pause or maybe, they may take a hike given what's happening in the global
The RBI's hike from the word go, I mean, if you take, it was 4% repo rate. It today stands at 6.25. Yeah. 225 basis. How much has the Fed increased in the same time? 475 basis points. So, the Reserve Bank has been moving at a very different pace compared to the Fed. So, the same, it's half the amount. 450 basis and 225, it's half the amount. And we haven't even realized that. We thought the Reserve Bank is moving in lockstep. So, it's quite possible. Now, what more is left? The expectation is that the Fed will do another 75 basis. If the Reserve Bank pauses or says that we are going into neutral and we will keep our options open on whether a hike is needed, I don't think that will be extremely out of sync. the rupee has strengthened considerably. We were pushing 83, now we are pushing 81. You know, we could straddle 81 sometime soon. So chances are that, you know, the Reserve Bank will have the nerve to pause. Okay, we have Aditi Nair of ICRA with us. Aditi, according to Ekta's poll, the expectation was that the WPI inflation will be over 5%, then it's come in at 4.9. Your thoughts, do the chances of a pause increase in Feb?
Thanks, Lata. See, we had also pegged about 5.6% is what we had forecast for the WPI for this month. So it's come in significantly lower than expected. And again, it seems to be on account of primary articles. So while the argument of core versus primary may be there, I haven't seen the internals fully for the WPI yet. But as we had spoken last week, even after the CPI data, I thought that the chances of a pause had gone up. So this is something that will reinforce that.
Yeah, you were one of the votes. I was just telling Ekta, Sonal and Mangalam, one of the persons who voted for a pause when I did that poll. But you think that we are now done with 6th quarter?
Yes.
That's the terminal rate. Okay. Now,
yes.
This WPI inflation itself, we have seen a significant fall, as you point out, 5.6. Ekta's poll was also 5.6. So the market thought like you, or you thought like the market, 70 basis points lower than what our poll threw up. Do you think this is a consistent behavior, or are we going to see some backlash? Because we already see global prices kind of rising. Manisha was telling us coal, iron ore, steel, all of them have inched up in expectation that China will demand.
So in fact, Lata, that's one of the reasons why we are not really changing, for example, our FY23 CPI inflation forecast, despite the positive surprise last week. So we're still at 6.6% instead of 6.7%.
Okay. So we could...
This may be a trough and then a little bit of a reversion after that, yeah.
Okay, that possibility exists. All right, Aditi, we will leave it at that. Thank you very much for taking our unscheduled call and giving us the benefit of your advice. So there you are. Expectation for a pause will go up. Now, we are not yet seeing it in the 10-year. This is because the 10-year is now reacting. It's at 7.31, the 10-year paper. It should have been a lot. It should be going closer to 7.2, given that we may not have a hike. This is largely because there is a fear that the government borrowing program could be high. And we are only 15 days away from that borrowing number hitting us. So the 10-year, which is a spot rate, it is understandable. It is not yet reflecting the slowness. I think we should pull up the 10-year at this point in time. I understand that we have to be showing the details of the WPI, but the 10-year bond is not falling. If you looked at the overnight index swaps, they've fallen considerably. That's a pure rate aspiration market. And there clearly you're able to see the yields falling by a good 25 basis points since pre-CPI announcement. So, yes, we are in for the
but
likelihood
as of now,
a
there's
pause.
no expectation of a huge change in the government borrowing program or the fiscal deficit number when the budget, with this budget. So
Yeah,
there's no
you know,
big
the
negative surprise
expectation
which
is that the
expected.
government has already announced that they will come down to 4.5% fiscal deficit from the 6.4%. Now, that is 200 basis points in 3 years, which means they should deliver a 60 to 70 basis points now. Will they deliver that 5.8%? And how much will they borrow from small savings? Because small savings rates are also rising. So they may impose more on the market. There are all these fears. You know, CD rates have gone up. Banks also are chasing more money because, you know, lending demand has gone up.
It's gone up.
There is enough pressure already from the private sector to borrow. Banks are borrowing from the corporate certificate of deposit market. Companies are borrowing from the CP market. Over and above that, if the government borrows a great deal, that pressure will be there. Until now, people were ready to be excess on their SLR because they were not having too much of corporate demand. But now you want to draw down on your excess SLR to service corporate demand. In that context, will you be able to stomach a, 17.5 lakh crore fiscal deficit and probably a 16 lakh crore coming to the market itself? So, I mean, the market's fears are well founded.
Okay, well, we're taking the 22-month low in terms of the WPI and the CPI 12-month low with both hands. Thanks, Lata, for joining in and taking us through this conversation. So definitely a positive WPI figure which has come through, but the core inflation has still remained sticky. It's down on a month-on-month basis, but it's still at around 3.2% versus around 3.5% in the previous month. But overall, the headline WPI is lower because of a lower food inflation. Take a short break, but on the other side, full tilt back on the markets and stocks which are reacting to news updates. Stay tuned.
The 53rd annual meeting of the World Economic Forum in Davos is currently underway, the largest conglomeration of global leaders. The big challenge here at Davos that is going to be up for discussion and deliberation is the possibility of global cooperation. Fiscal space continues to be challenged and constrained, and monetary policy seems to run out of options. What can the private sector do to try and push growth forward? There are going to be several important sessions that CNBC-TV18 is going to be part of. We are the only channel to get 3 sessions on the Davos main stage, and of course we have a whole host of global leaders that we will be in conversation with.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. At the day's low, markets are down 52 points. That's the Nifty. But of course, a lot of stocks which are in focus today. Just Dial is the stock which is buzzing in trade today. The company reported a strong growth in revenue and profit as well. Reema is joining us with the earnings fine print. Reema?
Thanks so much for that. It's a strong showing from Just Dial in the quarter gone by. Revenue growth at 7.8% on a quarter-on-quarter basis. On a year-on-year basis, it's touching that 40% mark. And if you look at the quarter-on-quarter trajectory, you would see for the last 3 quarters, things have been pretty good for Just Dial. They have been reporting a sequential improvement. On a year-on-year basis as well, 40%, 39.3 to be precise, is the best that we've seen in the last many quarters. Margins have improved for the 4th consecutive quarter. Q3 margins at 12.2%, but if I compare it to the prior quarter, it was 8.3%, and same time last year, margins were at 3.3%. And this improvement in margins is driving a 44% increase in the company's profitability. Paid campaigns, that's a key metric that we track, and that's seen an increase of 19.3% on a year-on-year basis. Again, the best that we've seen in the last couple of months. Citi has written a note. They're saying that Q3 top line was in line, but margins were ahead of their estimates. They've put the target price as 735. Valuations at 8 times March 20 PE, March estimates. X of the cash is just at 8 times, and therefore they're finding the valuations inexpensive, which drives their buy rating on the stock. Back to you.
Okay, all right, Reema, thanks very much for that. So that's on Just Dial, but let's stick with numbers. Avenue Supermarts came out over the weekend, and Mangalam is here to tell us more. Mangalam.
Well, it was a weak set for Avenue Supermarts, and the stock price reaction is telling you that the street didn't like the numbers this time around. What is it that the street did not like? The fact that EBITDA and net profit, both of them missed street expectations. That's not all. In fact, the gross margin and the EBITDA margin for the company were at a 7-quarter low. It was only the revenues which were in line with expectations, but those again, were because of the company's pre-quarter update, the direction was given by the company itself. Revenue per square feet, a metric that everyone's watching for DMart, that is still below pre-COVID levels. What does the company attribute this weakness to? They say that, non-FMCG discretionary items have actually not done as well as expected, and those are the margin accretive parts of their business. As a result of which, we've seen a slew of downgrades come by. Nuvama, which is erstwhile Edelweiss, they've said that the target multiple for the company should be cut from 60 times to 55 times EV to EBITDA, and if growth headwinds persist, this could go even lower. Morgan Stanley has downgraded the stock to equal weight with the target price cut as well, and the target price has been cut from 4,600 odd to around 3,850 odd. UBS, which were always sellers in the stock, they've also further cut their target price from 3,700 to 3,500 odd. So, maybe the halo around DMart is waning slowly. Just a couple of things we need to watch out for going forward, apart from the recovery in margins. One, they've expanded their e-commerce operations into 4 new cities. So how does DMart Ready behave going forward? And secondly, augmented revenues coming in from their new business, which is basically in the process of commencing a pharmacy shop-in-shop at all the DMart stores. So that is something that we'll be watching out for too. So that's about DMart, lower in trade.
Okay, DMart is lower in trade. On the other hand, L&T Finance, that is doing well in trade today after reporting its Q3 numbers. Abhishek is joining us to tell us more. Abhishek?
Well, the disbursements continue to remain strong, up about 32.8% YOY and about 19.1% sequentially. However, this is not translating into meaningful AUM growth, because in the last 8 quarters, if you see, the disbursements have been close to 79,800 crore, while the AUM has declined by 11,670 crores. So AUM growth continued to remain weak, up just 3.4% YOY, while it has declined by 1.85% sequentially. Even the focused AUM has declined by 1.8% quarter on quarter. ROE continues to remain weak at about 8.4% when compared to 8% in the previous quarter. However, the PNL has been strong given the fact that the net interest margin is at all-time high of 7.4%, and X of exceptional one-off items that you have, the PAT has grown by 39.3% YOY and about 11.8% sequentially. The asset quality largely stable, but slight hiccup given the fact that gross NPA ratio is at 4.21% when compared to 4.02% in the previous quarter. Back to you.
All right, Abhishek, thanks a lot for that. So that's about L&T Finance. We'll take a short break. On the other side, Ruchit Jain of 5paisa.com will join in with some trading strategies. Virtually at the low point of the day for all the frontline indices, and that's led lower by the HDFC triplets. HDFC Bank, HDFC Limited, both of them have a higher weight, and as a result of which we're seeing some decline in HDFC Life as well. So all these stocks lower in today's trading session, in fact at the low point as we speak. So good time to get in the F&O perspective, F&O side of things which are taking place in the market. We're currently at the low point of trade, but from the highs of today's trading session, we've seen a near 150-point correction. In fact, if you just take a look at the highs of today's trading session and the 20-day moving average, so that's telling you levels upwards of 18,050 might see some sort of resistance on a technical standpoint as well, because the 20-day moving average is placed at around 18,077, and this, remember, is a falling 20-day moving average, so it will converge at lower levels. The indices that I'm watching in focus, it's the Nifty IT as well as the Nifty Bank. It's been a stealth outperformer this month so far. In fact, if you just take a look at the Nifty Bank, it's down about 1.5% this month, and that's including today's cut, whereas the Nifty IT index is up around 2.3 odd percent. This was a complete reversal of what we saw in the previous year, 2022. The IT index was down 25%, whereas the Nifty Bank was up by around 15 to 20 odd percent itself. What are the active options that we're watching out for? Since we're below that 18,000 mark, the 18,000 call writers are extremely active. Levels upwards of 18,000 are seeing a lot of resistance. So almost a crore shares added in open interest for the 18,000 call for a premium of 60 rupees, telling you that levels upwards of 1850, which is today's high, will see a fair amount of resistance. 18,000 put writers too have been active. Those who are writing both the 18,000 call as well as the 18,000 put together are playing for a premium of 200 rupees, telling you that the broad range would be 17,800 at the lower end to about 18,200 at the upper end itself. Does that tie in with the technicals? Ruchit Jain joins in. Ruchit, your thoughts on the range, the borders of this range, and is there a possibility that 17,800 may break at some point?
Yeah, hi, very good afternoon. Well, if we see the data, then except that FIS figures, the other data does not seem to be much negative for the markets. In fact, the dollar index is at lower level, which is usually considered as positive for equities. And then even if you look at the global markets such as Dow Jones or Nasdaq, they have also seen a good pullback move from the support zone. But only thing is that FIS selling in the index futures have still continued, and they are still below that 50% long-short ratio mark, which indicates that more of their positions are on the short side. So I think unless we see short covering start of any short covering move by FIS front, I think the markets would not be in a hurry to give a breakout on the either side. The consolidation that we have seen off late, where 17,770, 17,760 has been acting as a support, and the 20 EMA since 15th of December was the day when 20 EMA was broken, and it's almost exact a month now where the 20 EMA has not been taken out yet. So this consolidation is likely to continue in the short term unless we see good short covering coming in by the FIS. So what traders should do, they should ideally play the range. They should not chase the markets on a up move near the resistance zones, and rather look to buy.
I'm just going to interrupt you there because we have the Federal Bank numbers on the screen. So we're just going to take that really quick. The gross NPA has worsened marginally on an absolute basis. So let's see how that is on a percentage to loans. But the net profit as well as the NII, in fact, the NII has come in on a higher basis, on a year-on-year basis. So it's an over 20% growth that we've seen in the NII. The net NPA has reduced as a percentage to loans, which is coming at around 0.73% versus 0.78%. Net profit is higher than estimates. It's coming at around over 800 odd crores versus our poll of around 715 odd crores. So there's a strong growth which is coming both on the profit as well as the NII on a year-on-year basis for Federal Bank. Now, what the parameters are, what the slippages are, that's really going to tell us the full story about Federal. But as of now, it looks like it's a good set of numbers which is coming for Federal Bank. Remember that we already had data that they had done well in terms of deposit growth, etc. So this, what they report in terms of slippages, asset quality will be the real determinant in terms of how the stock would probably move. So as of now, NII, profit, which is a beat, gross NPA, net NPA seems to be largely stable this time for Federal Bank.
Okay, all right. So, of course, we'll get in some commentary and more analysis coming in from Abhishek as well, as in when we get more numbers on Federal Bank. The stock is higher by 0.4%. With that, we'll quickly slip into a short break. As we do that, here's an important information for our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list. Welcome back. You're still tuned into Halftime Report. Well, Federal Bank, it is reacting to its numbers. So, of course, we'll get in more analysis on this one. But other stocks which are buzzing around in trade today, Varun Beverages is one of them, surging around 5.5%. It is on the back of a brokerage note. Jefferies has issued a bullish call. Manglam, what are they saying?
Well, they're saying it's a high conviction buy. That's as far as Varun Beverages is concerned. They have a target of 1540 rupees per share, which is a good 30-35% upside from current levels itself. We've seen the stock rally quite a bit in 2022, one of the biggest gainers, up almost over 100% in the previous year. But from the peak, it's corrected about 20-odd%. And this, they believe, is a good entry point. Why is that? Because the company will enjoy industry-leading growth in revenue and earnings. And this is based on the management's guidance itself of double-digit medium-term volume growth. The balance sheet for the company will continue to deliver, and the return ratios will expand this year as well. We've been talking about, the execution of Varun Beverages, which have slowly gained more territories from PepsiCo in India and the world itself. So that speaks about their execution quality. But at the same time, the industry opportunity is attractive with low penetration, low per capita consumption of carbonated soft drinks, and them getting better, realizations for newer products like the energy drink Sting, as well as them also planning to get into snacks, etc. So with all these things, they, want to double down on their high conviction rating on the stock. They have a buy rating, and timing wise also this makes sense because the next couple of months is where summer buying and summer consumption starts to kick in. We're in the middle of January, so maybe that is something that they've timed their conviction with as well.
Okay, all right. So that's the word coming in on Varun Beverages. So those are the slippages numbers which have come in for Federal Bank. So it's at around over 400 odd crores. So it's just about higher marginally. So to put it into perspective, in the previous quarter, the slippages had come in at around 390 odd crores. So it's a marginal rise on a Q-on-Q basis. So nothing really which is too far away from the mean that they've probably been reporting in the past couple of quarters. We'll get to the other parameters as well. The operating profit is up around 39 odd%. The net profit has come in at a growth of over 50% year on year, and we were anticipating a growth of 37%. NII has grown over around 27% year on year. We were anticipating a growth of around 20-odd%. And remember, we do already know a couple of details from their Q3 update, such as their advances, which were up around 19-odd%, deposit growth, which was the best in around 10 quarters. So the larger picture is that it has been quite a stable quarter, but that's probably something that the street doesn't like because the stock is off the day's high. The net interest margin has improved as well to around 3.5% versus 3.3%. So there's no real miss in terms of the parameters, except for possibly the higher amount of slippages that they've reported on a Q-on-Q basis. But if you look at it on an absolute level, it's coming at around 412 odd crores, which compares to around 390 crores in the previous quarter. So nothing really too disappointing in terms of the slippages as well. So that's on Federal Bank, just about negotiating in terms of a stock price reacting to its Q3 performance, which largely seems to be a stable quarter in terms of all of the parameters that they've reported as of now. Restructured ratio as well at around 2.2% versus 2.4% in the previous quarter.
Okay, all right. That is about Federal Bank. But RateGain Travel Technologies, that is higher in trade. Earlier today, we spoke to Bhanu Chopra, who's the chairman and managing director of the company, on their guidance. The stock is high by 4% at the day's high. Let's listen into what he had to say.
In terms of our growth, what we've been consistently guiding is about 30% growth. So this year we should end at like 580 crores. And in terms of next year growth, we're projecting again 30% growth there. In terms of margin profile, like you said, yes, they are breaking even, and our goal is like within the next 12 months, we'll grow the company 15% on growth and 15% EBITDA margin. Every year, we will expand margins by 200 to 300 basis points. So when we came into the markets last year, we were trading around 10%. So I'm happy to report that we are already exceeding that. And, the last quarter, if you look at, we were at 14%.
Okay, strong commentary on the margin front. That's RateGain Travel Technologies for you. For now, we'll slip into a short break and get you more on markets and stock-specific action on the other side of this very short break.
Welcome back. Just want to point out with regards to Federal Bank, it did slip into the red and now it's gone back into the green. Remember that the stock is very close to its 52-week high as well. So maybe there is, maybe the street has already anticipated a good performance, and that's the reason why you're not seeing any sort of huge movement which has come in for Federal Bank. Also want to point out that the slippages, if you don't compare them, if you just compare them to maybe 2 quarters ago, in Q1 of FY23, they had done slippages of 463 crores. This came down to around 390 odd crores and has moved back to over 400 odd crores. So yes, there is a significant improvement in terms of the absolute level of slippages. If you compare it to, say, Q1 of FY23 or Q3 of FY22, when it was 400 crores plus, significantly within that band. So yes, that's the performance on Federal Bank. Also just want to point out the absolute restructured book has come out. So there's not been much of a movement which has come out in the absolute restructured book. It's actually lower, 3,735 odd crores versus around 3,892 odd crores. Net interest margin has improved, loan growth flashing on your screen, up 4% Q-on-Q and 17% year-on-year. Well, let's move on to our special segment, which is Unusual Movers. Sonal is tracking the National Standard India. It surged around 63% this month. Sonal, tell us.
Well, yes, it's a big move that we're seeing on this particular stock. Just to give you some perspective, it's a Lodha Group company, Macrotech Developers. That's the promoter for this particular company. It has seen continuous upper circuits in last couple of trading sessions. And as you pointed out, stock is up almost 68% this month itself. That's in last 15 days. They did report their earnings on 11th Jan, but of course, it's the P&L that they have reported. And there they did see a substantial improvement in their revenues. Profits also came in higher than what they saw last year. And most of it was driven by other income. That came in at 2.75 crores versus 4.39 crores on a YOY basis. However, major component of this other income included the likes of interest income on loans. There were fixed deposit interests that the company received and miscellaneous income as well. Having said that, it's important to note, since it's a real estate company, the P&L really won't matter so much. It is, as I said, engaged in real estate development business and residential project by the name of Lodha Grandeza, and it's a mixed-use development. And India Infoline, in an earlier article, had quoted the Lodha Group and said that the listed subsidiaries, some of them, including this one, does not have a material business or a future business plan as well. So that's the only project that they are talking about. And they had development projects in the past which have now been completed, and company only has some inventory or investments, but not a bigger pie as far as their project portfolio is concerned. The other thing to watch out for is the impending merger between Lodha and this particular subsidiary. Back in Jan 2022, the company had announced, Lodha had announced that they'll merge with National Standard India Limited. 9 shares of Lodha will be given to the investors for every 100 shares held in National Standard India Limited, and ratio was unfavorable. They were going to lose around 99% of the stock value, that is National Standard shareholders as well. So that is the reason why that stock was under a lot of pressure after this announcement was made. Still, approval is needed here. But yes, just wanted to put on board that nothing fundamentally has changed for the company, but still we are seeing these continuous upper circuits and a 68% move in this month itself.
All right, that's the unusual mover, 68% this move. Wonder what's driving that stock. But as we speak, we have a big move on Sula. Sula was up 17% actually as we speak. It's been doing well in today's trading session, but now as we speak, it's only extended those gains and is moving towards that 20% upper circuit mark. Let's see where that goes. But take a short break, come back. We have Manisha Gupta joining in with Peter McGuire, who's the CEO, Exim Australia, with all things commodities.
Welcome back. Joining us on the show now is Peter McGuire. He is CEO at Exim Australia. Peter, hi. And 3 months, $300 of a jump up in case of gold prices. Is it overbought here? Should you be cautious, or are we in a one-line gain?
Well, good afternoon, Manisha. I tell you what, it's you can't get into the road of it because it'll run you over, and it's been a freight train over the last couple of weeks especially. So, yeah, I think there's more upside. There's a lot of fear in the market. There's a lot of worry as far as dollar, what's happening with the interest rates, inflation story, and central banks buying, and everyone's loading up on gold.
Oh, well, absolutely. But, you know, 5% of gains already in 2023. We saw 4% of gains in December. It was 6 or 7% up in the month of November. So the gold prices have been gaining back on a monthly basis as well. Where do you see some resistance? Should there be some cautiousness at these levels? Or do you think until the US Fed meeting is out of the way, we really won't know the direction?
Well, I want to get over the Fed meeting, and I also think that, like any market moves up as briskly as what we've seen, Manisha, you get points in time that you can, wipe out 15, 20 bucks quickly. A little bit of hot air comes out of it, but I think there seems to be more momentum to the upside than downside. So, yeah, maybe the 2000's got to be the number that it seems to have resistance at, but you've got to watch these markets closely, but it's not disappointing and it's offering plenty of excitement, certainly with its little brother as well, silver.
Yes, I will come to silver, but to gold first, where do you see a resistance? Until what time do you think we still are in a structural bull run and you can stay invested? I mean, would 1900 do that for you, 1850? What are the levels that you're looking at on the downside in sense of comfort now?
Well, it's got to be 1880, 1890, I think, Manisha, because there's a lot of fear going in as far as US dollar. It's tailed off. It's a very, very volatile day. And, everyone was thinking maybe we're going to see a 102, 102.50. We've already been to 101.8 in the last couple of hours, and then it's bounced from there. So I think that it's not going to disappoint as far as dollar movement, and that creates, again, more horsepower for gold. So, yeah, maybe 1880 to the downside, and for an upside, well, is it 1950, 1960, and then we'll recalibrate.
Yeah. Since you talked about the dollar index, and yes, that's going to be the main thing to watch out for. What's your sense? 25 basis points, where is dollar index going? 50 basis point, if that happens, where is dollar index going?
I think a lot of it's already been, baked in. So unless you see something dramatic come out as far as Fed rhetoric and the move, what they're prepared to do, 25, I think, will really add more of a brick to the dollar index. It'll pull it down harder. 50 will probably give it a little bit of stability maybe for a day or so, but I think the overall trend is softer from here. Have a look what's happening with the yen in the last couple of days as well. So, yeah, softness for US dollar to continue, Manisha.
You talked about silver, and yes, $24 per ounce is back and staying above that level for a couple of sessions now. Where are you seeing, where do you see that heading?
Well, it's 24.5, so I think, $24.50 for silver on COMEX. I think there's more upside yet. It's had about a 35% move to the upside from $18 going back to October. So it's been more dramatic than gold, and I think there's more upside in it. Everyone seems to be talking. Everyone I talk to and all the chat seems to be very focused on silver. from an industrial demand picture, and of course from an investment side. So yeah, people are starting to hoard it. They realise there could be a shortage globally, and that's creating more angst for traders and certainly for the people that want to hold it.
Okay, all right, Peter, as well as Manisha. Always a pleasure listening to your views, Peter, especially on gold and silver. Thanks very much for joining in and talking to us. So that is on the commodity space. For the markets, there is a little bit of incremental pressure which is seeped in. We have the Bank Nifty, which is down around 0.4%, and the mid-cap index, which is down around 0.2%. Bank of Maharashtra on your screen looks like a good set of numbers, at least on the profit, 775 odd crores, which compares to around 324 crores. Need to see what the base impact would be. As you can see, the stock is up around 4 odd %. Asset quality and the sustainability of that would matter the most. Remember, PSU banks are any which way the flavor of this morning's trade, and you can see that there is some amount of upside which is coming in on Bank of Maharashtra, reacting to those profitability numbers. It's a wrap on Halftime Report. This is Lunch. We'll take all the action forward. Stay tuned.